Hey ladies and gentlemen, welcome back to the channel. As always, it is Nick here, back with your daily crypto news and analysis. And today we are going to be talking about why everything is about to change. We are going to be addressing Ripple and XRP. We are also going to be addressing everything happening around the banking sector. So with all that in mind, let's dive in and let's start off with this tweet here. So what do you see? Breaking: 100% of all regional banks in the United States have their stocks in the red today for the first time ever. This comes a day after the Federal Reserve Chair Jerome Powell said the US banking system was stronger than ever. What did I tell you guys? That's right. He's lying to you. What we constantly see, and it's the narrative that gets printed every single time that a banking collapse starts. The banks are fine. The banks are fine. They don't want you to panic. They don't want you to panic. You want to know why they don't want you to panic? Because once you start panicking, it proves just how fragile the banks actually are. Currently speaking, as we look at banks, they are absolutely poor right now. They are broke. They don't have the liquidity. They don't have strong liquidity itself, which that was a big thing that the Treasury wanted to tell us. Hey, banking liquidity is so strong. The US liquidity is the strongest ever. It's all nonsense. It's all nonsense. Also, we do see over here that nearly 50% of people are worried about the safety of their deposits in banks. Did I get transported back to 1929 somehow? I want to ask all of you that are watching this video. You could be in the US, you could be outside of the US. Do you believe that your deposits are safe in the banks? Do you trust the banks? Do you trust the Fed? Do you trust the IRS? Do you trust all of these agencies that are constantly coming after you and telling you what to do and this, that, whatever, but also telling you lies? Oh, tell me sweet little lies, right? That's all we continue to hear from these individuals. And guess what they do? They pull the plug. They shut it all down. They wipe you out, and they don't care at all. Because guess what? The only people getting bailed out are those that are wealthy. They don't care about you. They don't care about me. They don't care about retail. They just care about the top, the wealthy, the big ones. That's all it ever is. Now, should you be worried about your the safety of your deposits? 100%. We continue to see the US bank run continue. Deposit outflows topped $360 billion in the last 3 weeks. This is going to continue. When we look at banks, they are imploding. There is absolutely no liquidity. These banks are poor. Like I said, they are broke, and I've been preaching this for the last couple weeks. Ever since the first bank collapsed, I talked about this. I discussed this with you. We've been warning about this, though, for well over a year. It's been brewing. We've been waiting for it patiently. And now it's finally happening. When we look at what's happening around deposits, I mean, it really is incredible. I mean, there's practically no deposits to outflows. It's insane to me. Now, also, over here, this is an incredible narrative to watch. Top 10 banks now control over 65% of all US deposits. JP Morgan Chase holds 2.4 trillion, Bank of America 2 trillion, Wells Fargo 1.4, Citi 1.3, and the rest goes on and on. Too big to fail. What's comical about this, though, is that when you look at these banks, when you look at the banking sector, it is now becoming centralized. What I think is happening right here, though, is the perfect narrative is being printed for us. What is that narrative? Well, when you think about it, the US government is trying to fight back against, decentralized finance. They're trying to fight back against the retail sector. They don't want you out of these controlled banks. When you look at centralization, to me personally, I think that crypto is going to be an escape for the retail sector. To escape the controlled, and it's mainly what we look at the banking sector, it's all just a puppet show. These big banks and these big elites, they're pulling the strings. They're controlling it all. These greedy suits. And guess what? That is exactly what's enough to push the retail sector away from the banks and into decentralized finance. into crypto that they can control, into crypto that has no ties to these elites. And when I say that, I know that there's elites in crypto, but when you think about it, crypto is far more decentralized than anything else out there. Decentralization is the key right now. And also, make sure that you are diversifying outside of crypto. Physical gold, physical silver. There's a ton of other ways as well. I even said it over here though. Everyone is still screaming the following: 4-year cycle, Bitcoin halving, market is dead until 2024. While we see the following: banks collapsing, de-dollarization going burr, DXY falling. Seems like we have a perfect narrative to push the prices much higher. People look for an outlet to park their dollars that are losing money due to inflation, and they want out of the banks. Currently speaking, as we look at those 4 key ones, money market funds. Now, money market funds is the big one to watch. Right now, it's the biggest one. We also see stocks, gold, silver, and crypto. Why are money market funds important to watch? These are where the money is flowing. Money market funds hold $5 trillion plus currently. That money will flow very soon. Why? Simple. They believe we are going to see a recession. But what if we don't? In my opinion, we are about to see a huge liquidity event. Remember, the 4-year cycle only works because it has ran on liquidity cycles, but what if this time really is different? The herd is flocking towards the 4-year cycle and Bitcoin halving narrative like usual. I tend to go against the herd. In my opinion, we are going to see a major liquidity event this year where we see a run up in the market. I also don't believe 2024 and 2025 will be bullish. I can be wrong and I will accept it. Why do I believe this? Simple. I think that's when we see the recession/depression hit. And a lot of people have talked about a possible transition. And a lot of people, question what I mean by that. Well, basically it's a transitional period from the age of fiat into the age of digitization. We've talked about this quite a bit with central bank digital currencies. I do think that they are trying to push that narrative quite a bit. We know that the FedNow service goes live in the summer. It's going to be very interesting to see that go live because I do think that that is actually an accelerant for banking collapses. Why? Well, when you streamline deposits and withdrawals, well, guess what? We are already seeing outflows at massive highs. While you combine that with 24/7, 365, instant settlement, so that's what they boast around the FedNow service. Well, when you have depositors that are, wanting to withdraw, and all of a sudden you see a ton of withdrawals happening instantly, that's only going to accelerate the problem. But anyways, I said, of course, this is what my mentality has been since the middle to end of 2022. I will stick to it. If I am wrong, I am wrong, but I don't like to follow the herd. And yes, as we look at this transitional period though, it's going to be very interesting to see what really happens. Again, a lot of people think CBDCs, a lot of people think this, that, whatever. If we do see them really accelerate the banking collapse, we'll most likely see them try to push CBDCs. They will say that CBDCs are for your safety, that, it's for your privacy, this, that, whatever. It's all nonsense. Don't listen to that. Because at the end of the day, all of what we are seeing is centralization. The same exact thing that's happening with the banks right now. They are letting JP Morgan control a massive amount, over 10% of deposits. That is a big issue in my opinion. A lot of people have, mentioned the same issue. To me personally, I think it's a big issue. Once you start to see the banking system become centralized, yeah, that's a big warning sign of what's to come. Make sure you are stepping the hell away from these banks. But over here, we have been watching the major banks. I mean, this has been in a free fall. These banks have started to fall rapidly. Here's major banks. Here's regional banks. I mean, this is a big deal. Now, PacWest was up 81% on the 1 day, which I thought was pretty interesting, but it is still down a massive amount on the weekly. We are also still seeing it down on the monthly, on the 3-month, on the 6-month, and even the year to date. On the 3-month is when you could actually see a lot of these down drastically. Major banks are also down though. We have been focused on a lot of these major banks. If you actually go to the change on the 1 week, there is some green though. But going back to that initial view here, yes, a lot of these banks were in the negative. And this is a big deal. And the funny thing is that Jim Cramer himself said that the banks are fine, that this isn't like 2008, that, the banking system is also sound and resilient, which I thought was pretty funny. But again, this is only going to continue to heighten, and it's a big deal. And I also want to play this quick little video over here. This got posted on Twitter. It's very interesting. I think that this is a great watch, but listen to Dalio. He's on why this is bigger than people think. It's not just a banking issue. It's a global issue. All sorts of entities, pension funds, insurance companies all around the world. There was a lot of buying of these government bonds, which have gone down in value. Listen closely.
And so this thing with the bank is not a Silicon Valley Bank alone issue. It's not a banking issue. It is a global issue in terms of all around the world, all sorts of entities, pension funds, insurance companies, all around the world. There was a lot of the buying of these government bonds, which have gone down in value. And so,
and yeah, I do think that this is going to be much larger than what people really see. In my opinion, I talked about how this is going to be much larger than 2008. I mean, when we actually look at what's happening here, this is building up to become a big, big problem. We did say over here from Peter, you guys know me, I personally love what Peter is mentioning around a lot of these issues. He's spitting it straight. Listen, a lot of people are trying to, flip-flop around the subject, but the realization is the fact that, yes, this crisis is now bigger than 2008, and that's exactly what he's saying here. Listen closely to this video.
Just hours after Fed Chairman Jerome Powell told America the, quote, U.S. banking system is sound and resilient, it fell off a cliff as major regional lender PacWest collapsed over 50% in aftermarket. And so, paired with the collapse of First Republic last weekend, by assets, the 2023 bank collapse has now officially exceeded the 2008 collapse, with apparently a lot more to come from this very sound and resilient banking system of ours. Even the bottom feeders are slinking off as Toronto Dominion, Canada's second biggest bank, just scrapped plans to buy First Horizon out of Memphis, putting First Horizon and its $80 billion in deposits on the hospice list, its shares plunging 52% on the day. As I mentioned the other day, what's scary here is that going by 2008, the early collapses are only the beginning, the screaming prelude to an extinction-level culling of banks crawling off to die. In raw numbers, the 25 U.S. banks that collapsed in 2008 were followed by a drumbeat totaling 440 banks in the following 4 years. That's 110 per year, compared to 2 per year pre-crisis. So we haven't even begun to see what's coming. The other day I mentioned interest rate hikes typically take 12 to 18 months to really hit the economy, and we're barely 6 months in. So lining up against the 2008 crisis implies the real storm is not even hitting for another year. These are the first breezes of a coming hurricane, and yet here we are. Meanwhile, we've got an article today from London's Financial Times by Krishna Guha. He is former executive VP of the New York Fed. That's the part of the Fed that actually runs the show, saying European banks could be in serious trouble given they face the exact same problems U.S. banks do, thanks to the European Central Bank running the exact same playbook the Fed did. Hike till it breaks, pray for a miracle. In fact, the EU is even more dependent on regular banks, given their shriveled non-bank sector. By some measures, banks are almost twice as big relative to their economies. And going by 2008, those banks are in even worse shape than U.S. banks. Even though 2008 was entirely made in America by our insane housing policies, it collapsed the largest bank in Switzerland, the venerable UK bank Lloyds, founded 1765, and Royal Bank of Scotland, founded 1727, and it collapsed some of the largest banks in Germany, Holland, Belgium, Ireland, Portugal, and Spain. That domino collapse in Europe ultimately led to a sovereign crisis that countries like Greece never fully recovered from. Now, given EU financial stresses are far higher than in 2008, partly for their suicidal environmental and deindustrialization policies, Europe could once again ride America's clown show straight off a cliff. Ernest Hemingway once wrote, "There are two ways to go bankrupt, gradually, then suddenly." It is looking like suddenly is getting a whole lot faster. Okay, we'll be watching. See you next time.
And this is becoming a major, major problem. This is also why I said internationally, like, listen, if you are outside of the US, it is not just a US issue. This is a global problem. And we'll definitely be keeping track of everything happening. We have been watching major banks. We have been watching regional banks. I think everyone should be watching both of these. This is over on TradingView. You go over to TradingView, go to markets, go down here to stocks. And once you go to stocks, you go to sector and industry. Once you are in sector and industry, if you click this, you could see down here. So if you scroll down, you can see all of the industries down here. You want to go to finance. This will open another tab. Once you go to industries, here is where you could see major banks. You could also see regional banks down here. And you could even see savings banks if you want to go the extra mile. We are seeing a lot of problems arise with a lot of these banks. And I think everyone should have all of these on their watch list. You don't have to watch it 24/7, but I do think that everyone should be watching it at least while the Dow is open and the stocks are trading, because it is a serious problem. Obviously, a lot of these are paused due to the weekend coming up, so we won't have these live until Monday. But we will definitely be watching. We will definitely be analyzing a lot of this and updating, as we go. But with that being said, I hope that you guys enjoyed this video. If you guys did, definitely leave a like, subscribe, to notifications on if you guys want more free content. You guys are more than welcome to follow me over on Twitter and join the free Discord in the description below. So I hope that you all have a beautiful day or a beautiful night wherever you guys are on this beautiful world. This has been Nick. Peace out, guys.